Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York, and in today's video we are going to discuss the commercial real estate crisis, which is spreading. It's coming up fast, and I feel like it's going to implode and then explode. So I figured the best way to go through it, I've watched a lot of videos on the topic, and I'm a pretty smart guy, and a lot of this stuff I can't seem to figure out or understand what people are saying, so I've found the best, easiest way to understand it and describe it and share it with you. So if you're into economics, finance, making money, things of that nature, please be sure to like, comment, and subscribe. So long story short is it's kind of like the 2007, 2008 real estate, residential commercial bubble. You bought a house for $500,000. Overnight, it went up to $1 million, and then all of a sudden, it was worth $250,000, and you were underwater, and you didn't want to pay for it anymore. Rightfully so. So, the banks were stuck with all these notes. Remember, they lent you $500,000 to buy that house. Now it's worth $250,000, so they have to write off $250,000. So that's what this is like, except we're talking trillions of dollars. I'm going to list off a few examples for you that'll kind of explain what's going on. An office building built in 2019. This is in New York City, next to Penn Station, recently sold at foreclosure at auction for $16 million. This is shocking, given the seller of the building reportedly spent $90 million to develop the property. So imagine spending $90 million and now you're getting back $16 million. According to sources, New York's office occupancy is a dismal 40%, while an increasing amount of owners have handed keys back to lenders. Deals at huge discounts have yet to hit the market. And I'm going to give you a few other examples of that, but this is the gist of it here. In Portland, Oregon, the iconic American Bank building near the courthouse recently sold for $13.6 million, which is $75 a square foot. The last time the building changed hands was in 2014 at $45 million, or $245 a square foot. So this is a 70% haircut, and this is Portland, Oregon. And let's keep on humming along. St. Louis, a 1.5 million skyscraper AT&T tower in St. Louis is being auctioned with a starting bid of $2.5 million, right? $2.5 million, $2 a square foot, which is absolutely insane. I can tell you I'm personally buying a building right now for $2.5 million, 14,500 square feet in Comac, New York. I'd love to buy this building for $2.5 million for 1.5 million square feet. And the issue here is that this building was sold by AT&T to a real estate investment trust in 2006 for $200 million. Trading for 1%. And to make matters worse, last year the building actually sold for $4 million at an auction. So you're talking hundreds of millions of dollars of massive losses being written off. Humming along to our favorite, most liberal state in America, California. By the way, there's nothing wrong with being liberal. In San Francisco, a buyer has been selected to purchase a 300,000 square foot building for $60 million or $200 a square foot. The current owner / seller paid $121 million for this building in 2013. So imagine 10, 11 years later, you're going to take a haircut. When you buy real estate, you expect for it to appreciate, but that's not happened. Commercial real estate has depreciated here. In 2000, the building was 97% leased out. By March of this year, the occupancy was 65%. What's more concerning about this particular building in San Francisco is, guess what? Occupancy includes 31% of WeWork is occupying the building. So they're in bankruptcy. They're going to negotiate that down, and this building is going to lose more money. I mean, people are actually going in and buying this stuff now. It's catching a falling knife. I wouldn't do it. Moving along to another great state and another liberal haven, and I mean that with all due respect, nothing wrong with it. Chicago, Jewelers Building. The historic landmark tower in Chicago is reportedly going to be sold for a shocking price of $39 million or $70 per square foot. The current owner has reportedly spent more than 118 million in upgrades over the last 2 decades. Never mind what they paid for it. So imagine spending 120 million. Now you're selling it for a third of that, right? Never mind the maintenance and all that other stuff. This was actually a candidate to be converted into apartments. But of course, we know that based on study after study, you can't do that. And humming along, actually, no, I take that back. Staying in Chicago, a major 623,000 square foot office tower in Chicago recently sold for 45 million, which comes out to a shockingly low 72 square foot. This building sold for 122 million in 2014, 65% discount. Now, all these small regional banks, right, lend money. There's about 4,500 banks. Case in point, New York Community Bank, which everybody thinks is small, is actually the 35th largest bank in America. That's huge. So if they go, there's going to be a lot of other dominoes that fall as well. And to go a step further, the purchase price is just half the amount of Morgan Stanley's $88 million loan that it provided the seller in 2019 as part of a refinancing deal. So even Morgan Stanley is toast on this. And once they start to write this stuff off, they're going to be incurring massive losses. And we're going to touch on the unrealized losses that banks are carrying in a little bit. Going back to New York City, Deutsche Bank will be taking a $350 million loss on a New York City office building. In 2014, Deutsche Bank bought a 800,000 square foot building for $500 million. It's reportedly ready to sell it for $150 to $200 million. The office is just 31% occupied after Bank of America, the anchor tenant, vacated. WeWork, by the way. Yeah, gotta love WeWork, gotta love Adam Newman. Also leased a significant amount of space, but this location is affected by their bankruptcy. And this is just the tip of the iceberg. This hasn't even started. I don't know if I touched on Washington, D.C. before, but we're going to do it again if I didn't. And if I didn't, we're going to do it for the first time. An office building near DuPont Circle just sold for a shocking 77% discount to the price it traded back in 2016. The building sold at a price of $21 million, which is $72 million less than what the building sold for in 2016, which was $93 million. Again, this is the issue here, that nobody's just laying out in clear, concise, understandable terms. You know, I'm a bank. I lend out $500 million. It's secured by real estate. At the time, the real estate was appraised at $500 million. Now it's worth $250 million. I have to take $250 million worth of losses. I could also go on and on after example about this, but I'm not going to. I think you get it. And continuing along with the video, what's causing the real estate trigger? What's causing this crisis that's coming up? Well, persistent inflation pressures due to the Federal Reserve keeping inflation rates artificially low for decades and having quantitative easing who have now raised rates tremendously, plus COVID, have combined to this or amounted to this. And the regional bank crisis was disguised with liquidity, but reality showed that unrealized losses on the bank's balance sheets rose to an all-time high in the third quarter of 2023. Regional banks remain in deep trouble. So we haven't even got to the fourth quarter of 2024 and their unrealized losses. It's going to be astronomical. It's going to be huge. Delinquency rates in commercial real estate have reached a 10-year high with almost $80 billion worth of property in distress. And by the way, if that's what they're saying, it's probably a lot worse, right? According to MSCI Real Assets and Fortune, the value of buildings that were bankrupt under foreclosure by lenders on the process of liquidation rose by a net $5.6 billion in the third quarter of 2023. Office properties accounted for 41% of the $80 billion total. The other issue here is everything is intertwined, right? So corporate bankruptcies can trigger a cascade of financial repercussions affecting property values, rental income, investor confidence. By the way, the less rental income they collect, the less tax revenues that governments and cities collect. And everything is intertwined, right? Kind of like when you throw a rock into a pond, what happens? It goes, and it spirals out. It's like a spider web. And that's what's happening here. And these cracks are going to just expand and get worse and worse. So what does this all mean for the Federal Reserve? The Fed is caught between a rock and a hard place. They have to choose between inflation and financial stability. Inflation is still rocking and rolling. By the way, they released more minutes. Again, inflation is still way too high. It was supposed to average 2%. Now they just want it to be 2% because if they actually averaged inflation was 2%, we would have massive deflation because prices have done nothing but gone up since COVID. Another video for another day. Maybe I'll do another video tonight. By the way, if you're enjoying this, please be sure to like, comment, and subscribe. And let me know if I'm missing anything, if I could be any clearer, if, any topics. You tell me what your thoughts are. It means a lot to me, keeps me going, and I really appreciate it. So remember 2007, market participants said that the subprime was not a threat because it was a relatively small proportion of all assets in the financial system. We know how that turned out, right? And if you don't, go back, look up history. A lot of people made a lot of money back then as well. The risk of contagion and the domino effect of corporate bankruptcies and impact on the real estate, not just commercial, is not small. The issue is the Federal Reserve can't cut rates low enough. And even if they do, it's still not going to solve all of this overpriced real estate, right? It's not going to solve the issues at hand. The rise of delinquency rates in commercial real estate market creates a significant challenge for the Federal Reserve as they will not be able to disguise it or mask it with liquidity. Again, the law of supply and demand. If something's worth $250 million, even though it was worth, $500 million or $1 billion 2-3 years ago, doesn't matter. I'm willing to pay what the current rate is for it now. And another analysis by Neil Callahan of Bloomberg highlighted the commercial real estate crashes unfolding is the natural consequence of quantitative easing. New York Community Bank Corp, which we could do another video on that, by the way. And this stems from that, right? All of a sudden, New York Community came, they're kind of like the canary in the coal mine, in my opinion. They're just leading the way out, and it's going to be one thing after another after another. The blood's only begun to flow, in my opinion. And, I don't want to sound bitter or jaded, but, all these people made a ton of money. They did things the wrong way. They're going to stay profitable. They're going to stay, meaning the people who made all the money, the CEOs, the bank executives that made a ton of money doing these loans. They have their money, and when the dog do hits the fan, they're going to be able to walk away, and most of these commercial properties obviously aren't personally guaranteed. Blackstone owns a bunch of them, BlackRock owns a bunch of them, but there's no personal guarantee. So no harm, no foul. You have the option of walking away. And basically the office market has an existential, has a crisis right now. We'll go with that. It's a $3 trillion asset class. It's probably worth $1.8 trillion. And all these small local banks that have exposure to it are going to take it on the chin. They're going to go out of business. And if you're asking me what to do, I would say sit on the sidelines. You could short these stocks. Am I going to short them? No. Am I going to wait for them to go down to being penny stocks and then buy a bunch of them? Absolutely. That's my plan here. That's how I think people are going to make a ton of money. That's how I plan on making money. I just did a video on Peloton stock. It was about $4 when I did the video. It's up and running. Last I checked, at about $4.80. Please check that out and be sure to like, comment, and subscribe, and have a great rest of the day. Thanks.